Okay, welcome back for more work. We're here. We've got the practice problem for chapter 1. And so I want to talk a little bit about this. The name Sanusoni, start a new business. These are transactions that are done. Requirement, arrange the following assets, liabilities, and equity titles in this order. Okay, and they list all the accounts. Use addition and subtraction to show the effects of each transaction on the accounts in the account equation. Show the new balances after each transaction. For this exercise, I'm not going to do a balance after every single transaction. I'm just going to go ahead and do it line by line here. So we have here the assets, which covers all of this. Right here all the way to here. Then I have liabilities, right here, and then I have equity over here. From here all the way across. Okay. And then, of course, assets equals liabilities plus equity. I know it looks like the letter F. It's not. It's a bracket. So assets equals liabilities plus equity. Okay? Alrighty. So let's start with the first transaction. Sanusoni transferred $65,000 cash from personal savings to checking account in the name of Sony Electric. Alrighty, so we're going to wind up adding $6,000 cash, $65,000, sorry, $65,000 cash will be increased. And anytime the owner of a company adds to the company, they're going to put to capital. That's going to wind up going to the capital account. So because he's contributed money to invest in the company, that money will then go to the capital account. On December 2nd, the company rented office space and paid $1,000 cash for December's rent. Okay, so we have a decrease of $1,000 in cash because he paid $1,000 cash for rent. And we're going to come all the way over here to expense, and we're going to do a negative $1,000 also. And people ask, when doing this on Connect, should I put parentheses or should I do a negative sign before the number? Either way works. Easier if you just do the negative sign because you have a lot less work putting in parentheses. Alrighty, next one, number 3 is December 3rd. The company purchased $13,000 of electrical equipment by paying $4,800 cash and agreeing to pay $8,200 balance in 30 days. So when they're saying that this is going to be in the future, $8,200 in 30 days, we're talking accounts payable because they did not pay cash for all of it. They only paid $4,800 and they're going to pay the rest of it 30 days later. So we're going to be talking about accounts payable here. Alrighty, so let's do this. We're going to take one step at a time. They purchased $13,000 of electric equipment, so electrical equipment is right here. We increased $13,000, so now we have $13,000 worth of electrical equipment. We paid $4,800 in cash, so that's going to be minus. And we set up an accounts payable of $8,200. So it's going to be a plus $8,200 in accounts payable. Now, here's where the truth or consequence happens. This is the left side of the equals mark. This is the right side of the equals mark. Left side 13 minus 4,800 equals 8,200. So my equation is still in balance, folks. It's still in balance. Okay? Alright, let's try the next one. On the 5th of December, we have the company purchased office supplies paying $800 in cash. So $800 in cash is going to be decreased. And we're buying office supplies, so we're trading one asset for another asset. So increase of $800 to office supplies, decrease in cash. Okay? Next one. Company completed electrical work and immediately collected $1,200 cash for these services. So they collected cash of $1,200 or $1,200, and we're going to recognize revenue because they performed services and they completed it. Okay? So since they completed the work, they get to recognize the revenue. And how did they get paid? Well, they got paid in the form of cash. They could be paid in the form of cash, or it could be an account receivable, or heck, I mean, they could wind up bartering, trading services for something else. Okay. On the 8th of December, the company purchased $2,530 of office equipment on credit, and again, we're talking about accounts payable. So we have office equipment, not to confuse this with electrical equipment. They're two different things, so don't mix them up, okay? Office equipment, $2,530. And on credit, so that was accounts payable, $2,530. Again, notice that everything I'm doing on one side of the equals mark is going to be the same on the other side. So I stay in balance all the time. On the 15th, the company completed electrical work on credit for $5,000. So now we did $5,000 worth of work, okay? So on the 15th, we're going to recognize revenue of $5,000, okay? How do we get paid? Well, it says on credit. So the only thing is we did not get cash. We did get accounts receivable because that is the receiving side of credit for us. So I'm going to increase accounts receivable by $5,000. Good. Number 18. The company purchased $350 of office supplies on credit. So again, we got office supplies of $350. And we hit accounts payable because it was on credit. Okay. On the 20th, the company paid $2,530 cash for the office equipment that was purchased on December 8th. Now you can go back and look at it. Well, there it is, $2,530. Okay, so we did wind up paying for that. So we're going to decrease cash $2,530, and we're going to decrease accounts payable $2,530. Okay, minus, minus. Okay, so both sides of the equal mark are balanced. Okay, on the 24th, the company billed a client $900 for electrical work completed. The balance is due in 30 days. Okay, again, we're talking about payment that's going to be happening. We completed $900 of work, so we get to recognize the revenue for that because that has been completed. And we're going to receive it as accounts receivable because we're not getting cash right now. It will be an IOU. So accounts receivable is increased $900. On the 28th, the company received $5,000 cash for work completed on December 15th. So here again, we will do an increase of $5,000 to revenue because we completed the work, and we received cash of $5,000. Okay. Next one, the company paid the assistant's salary of $1,400 cash for the month. So we paid $1,400 in cash, decrease $1,400, and it was an expense because we paid the assistant's salary right away. So that's going to be a negative 1,400 over on the expense side. Next, on the 30th, the company paid $540 for the utility bill. So $540 is a minus in cash because they went ahead and wrote a check for that, and the expense $540 for the utility bill. Last one, San Usoni withdrew $950 cash from the company for personal use. So again, I'm going to do a negative $950 in cash because a check was written. And this time I'm not going to hit the expense account, I'm going to hit the withdrawal account, which goes hand in hand with the capital account. So $950 minus okay, so these expenses should be wind up marked. So I think the $1,400 was for salary. The $540 was for utilities. The $1,000 here was for rent. And I'm just doing this so I keep straight which of these expenses are for what, okay? Because we don't have them split out. And then after that's done, I total everything down here at the bottom. So I add up the pluses and minuses for my cash, and I get $59,180. Accounts receivable will be $900. Okay, so I realized that when I did the transaction on December 28th, I misread this. My bad. The company received $5,000 cash for the work that was completed on December 15th. And so this is supposed to be a negative $5,000 because I decreased accounts receivable. Okay, and I should not have $5,000 here twice. I ended up recognizing $5,000 up here as revenue and creating an accounts receivable, and then on the 28th it says that I received the cash from that work completed up here, and so now I have to reduce the accounts receivable by $5,000 and recognize $5,000 in cash.